It's about that time of day again. Time to get back to work here tonight, guys and gals. Got a lot to cover in tonight's video newsletter. It's Tuesday evening. It is November the 5th, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, I help traders find high-quality setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. My job tonight is extremely important because tonight on the video, I'm going to help you guys find the best levels of support and resistance for tomorrow, the best entries and exits for tomorrow, and most importantly, help you avoid some of those easy traps to avoid in tomorrow. That's Wednesday's trading session. And tonight, we got a lot to cover here tonight. We got some oil, some S&P, some Nasdaq, and of course, we'll wrap up tonight on that gold. We'll check the calendar, get ready for tomorrow's news. We got some big news tomorrow across all of these markets. But I'm going to jump in first tonight, though, on the black gold, the Texas T. We've been watching that halfback for the past week now. We're right back to that halfback point here, and we're going sideways again. Halfback is resistance. Range-bound market is balanced. We got a great plan ready for tomorrow. Let's grab that chart and let's get this party rolling tonight on this video newsletter. What do we know right now about oil? We know right now we're right back to that September high, right? That 63-quarter September high, those drone attack highs, and we are halfway back, and we keep sitting right around that 57.17 area. So we know this area. We've been talking about this area for quite a while now. This continues to be a very sticky area on the chart. We know, of course, from last night's newsletter, we were waiting for that pullback, trying to go back up to get those highs again. We got it, but you can definitely see, though, the buyers have control, but they're not getting very far, are they? They're having a very difficult time right below those highs. We know we're bullish, but we're clearly having a hard time going higher. Buyers are rejecting the idea of buying to new highs, and so we have to keep waiting for opportunities to buy during the pullbacks. That's what worked best earlier this morning, and we're going to continue tomorrow to look for those buy setups underneath the trading range. Now, with that said, I've got really two main spots here I'm looking for those long trades. One is off the low of this hidden channel, we'll talk about here in a moment, and the other, of course, if we get that deep pullback, we'll look for a slightly more conservative, but still looking for that buy setup as we pull back underneath that trading range. What if we keep going higher here? What if the market keeps running higher here? I've got a bunch of resistance overhead. I can't rely on the breakouts. We saw how breakouts were failing earlier this morning. We can't rely on that breakout. We'll talk about my two favorite breakout patterns to look for as we go higher. Got to be careful, though. That measured move is right overhead here as we go. So I want to buy low. I am open-minded to buying the breakout, but I've got to wait for one of those two patterns. We're going to talk all about those setups here on the video tonight, so make sure you stay tuned for more on that. Over on the S&P, what is going on with the S&P here right now? The tale of two trading ranges, right? We get a range to begin the day today, a range to finish the day today, and I would imagine we're going to probably find our way back up into that trading range from earlier on in the session. You'll notice I've highlighted here the two-try rule. Bear move down, one try, two try. I think these buyers are all waiting underneath this area, and I'm looking for a chance to be a buyer on this right as we go lower here. So I'd like to try to pick a bottom on this S&P, and honestly, and I'll go into more details tonight on this video, but honestly, there isn't a lot of selling area here. It's going to be a very difficult market to be a seller right now. There really isn't a lot of wide open spaces for those sellers. So the bottom line is, and we'll go into a lot more detail on this, the day starts off inside of a range. A day that starts inside of a range usually ends inside of that range. You'll see the Nasdaq here in a moment, but you'll notice they couldn't finish the job off. That tells me right now that apparently we have not pulled back low enough to attract enough buyers into this market. So I've got my eyes on this area here, and I'm looking for one very specific pattern inside that battle zone to be a buyer. If I'm wrong and the market shoots higher, I will gladly be a buyer on the way back up. Just got to be careful though. We don't want to try to get too aggressive on the way higher. So we'll talk about how to be a buyer on the way higher. And of course, what would qualify as a sell, right? We got to get another leg lower here and continue. We'll talk about, at least from my point of view, what it's going to take for me to want to be a seller in this market. Because as you can see right now, I definitely have the bears with the edge. But I don't think those bears really going to have a very easy time in tomorrow's trading session. A lot of it has to do with the news tomorrow morning. I'm going to talk about that in a moment as well. If you're an S&P trader, S&P is going to be a tough one here for tomorrow. We're going to put the plan together tonight on this video, so make sure you stay tuned on that. The Nasdaq is a walk in the park here tonight. As you can see, we get that strong move up right into that trading range. It's a bull market. It's got a range-bound market on it, right? We're balanced here. Range-bound market, bullish bias. I want to buy underneath this range here for tomorrow. I've got a beautiful hidden channel waiting down here. I've got my expanding triangle low down there. I've got my measured move. All we need right now is to get that pullback, right, and get that buy signal off of that low. Now, what is the best buy signal for this? This is a really good question because is it going to be a shallow pullback? Will it be a deep pullback? Determining which type of entry pattern has a lot to do with momentum, right? Momentum is going to be critical on this buy here. I want to be a buyer on the Nasdaq. I don't know how far the market will pull back just yet. Depending on how far it pulls back, that will determine which type of entry pattern I'm going to use. And of course, what if this market takes off to the upside? I've got some big targets waiting up overhead. We'll talk about my two favorite breakout patterns, and we'll also talk about my targets here waiting here overhead. Looking to buy low right now on the Nasdaq. We'll cover the buy side, the sell side, and everything in between there on the Nasdaq tonight. And then wrapping up here on the gold. Boy, we talked about this last night, didn't we? Right? Just last night, we were talking about the fact that something was going to give here on gold, and sure enough, they must have been listening into this newsletter last night because gold just puked running lower here. Now, what do we know about gold right now? We know the market is bearish, right? That's pretty obvious. It doesn't take a genius, right, or a very experienced trader to see we are bearish right now. And of course, in a bear market, I'm looking for ways to sell at resistance. I've got a couple levels of resistance here overhead. I'm looking for a chance to sell off of. I've got my really enticing area I'd like to be a seller off of. And a lot of this is the same thing we talked about on the Nasdaq. Do we get a shallow pullback? Right? Is that the pullback we get? Do we get a deep pullback? Because, deep or shallow pullbacks, it's all about momentum. And we'll talk about the best way to sell, whether we get a really nice deep pullback or we get a real shallow pullback. I also want to be very clear. When a market goes this far, that fast, right, in one trading session, we almost always go sideways, right? We almost always go sideways. So we have to be ready for the potential for a sideways range. And I'll tell you, on days like what we're probably going to get tomorrow, we're probably going to get a range tomorrow. And I've got one very simple technique I want to show you to stay patient and wait to find the best entry setups if we do go sideways. We may go lower, but a lot like the S&P, there's not a lot of open space underneath us. So I definitely can't be a buyer on this, right? I've got to be a seller. But I'll be honest though, right? I'll be honest, I wouldn't be surprised either. If this market ran right back up to that big round number, how would you buy this market? Very carefully, right? Very carefully. So we have a lot to talk about tonight on the gold. What if we get a shallow pullback? Deep pullback? What if we go range bound? What if we reverse? And what if we keep going lower? We're going to cover all those bases on that yellow metal on tonight's video. I got them all ready to go here. I got you here with me. We got the charts all prepped up. Before we jump into this lesson tonight though, as always, I want to remind you to make sure you join our mailing list. Make sure you join the mailing list. That way you never miss another great video newsletter. And joining the list is easy. All I need is your name, your email address. Hit that subscribe now button and then check your email, because as always, I'm going to send you a welcome email with a verification link and a bunch of great free resources. Sometimes that welcome email gets stuck in your spam filter, so if you don't see the welcome email, check your spam folder. And once you join that mailing list, now you'll make sure you never miss another great video on this nightly newsletter. How about questions? You got any questions for me? I'm always listening. I'm always hanging out in the comment section below. If you have any questions about the trading strategy, or maybe you got some feedback for me, right? In your eyes, how can I make this video the very best it can be? What can I do better? What could I do more of? What would you like to see me add to this video newsletter? Drop me some questions. Drop me some feedback in the comment section below. I'm always listening, and I really hope, right, to hear from you there as well. And don't forget, while you're down in the comments section, do me a big favor, hit that thumbs up button for me tonight on the video, because believe it or not, every time you hit that thumbs up button, YouTube helps to expose this video to other traders who would love to learn this trading strategy as well. So don't forget, drop those questions in. Don't be afraid to give me some constructive criticism down there in the comments section. I'm always trying to make this the best video newsletter to help your trading, so let me know how I can make it better. Hit that thumbs up button while you're there. And don't forget, if you have any questions that don't deserve the comments, or maybe you want to call me and ask it in person, I'm always here standing by. Call the toll-free phone number in the upper right-hand corner. A lot of people call the office every week asking about the best brokers, the right data feeds, the markets you want to be focusing on, or maybe you have questions about how to get access to our trade room on a free pass, or how to get how to register for our free trading classes. It's all covered there. Grab that toll-free phone number. Call me in the office. I'm always here to help you guys out. But in the meantime, though, let's get this video going tonight. I apologize. I'm a couple minutes late here to the party. I have been having some technology issues all day today with my Microsoft Office, but we're pushing on through it. Want to get this video done for you guys so we're ready for tomorrow. Speaking of tomorrow, tomorrow is Wednesday. It is November the 6th, of course, right smack in the middle of the second week of the month. And as you can see, really the big news for tomorrow is that petroleum status report at 10:30 Eastern time. Now, keep in mind, guys and gals, this only applies to oil traders, right? So everything else is going to be off limits on this one, or won't be affected by this. And really what you want to remember is after 10:15 Eastern time on Wednesday mornings, this market usually quiets down and flattens out and becomes really, really quiet, right? And it's kind of the calm before the storm, because at 10:30 that news comes out and usually all hell breaks loose, right? And you got to give it 5 or 10 minutes to let the dust settle before you start to kind of see what the market's reaction to that event is going to be. So the big rule of thumb for tomorrow is, when it comes to oil trading, 10:15 is really my cutoff. I'll trade all the way up until about 10:05, 10:10, and then usually by that time of the morning, it will be slowing down pretty significantly. I'll button it up on oil, wait till that 10:30 news comes out, wait until about 10:40, 10:45 when the dust settles, and we'll get back on the horse and start trading it again. So just kind of carve out that time tomorrow. Let's say 10:45 just to be safe. Sometimes it's earlier, but it's usually not a good idea to be jumping into that oil market within 5 or 10 minutes after that status report comes out. And as always, don't forget, we'll be trading this stuff tomorrow morning in our trade room with all of our members, so you'll be able to do it right there along with us. As you can see tomorrow also too, we've got no shortage of Fed speakers. We got Evans, we got Williams, Harker, and of course Williams back at the end of the day again. No shortage of speakers, right? And remember, we've got a lot of back and forth about interest rates and the Fed. We think they've cut rates the last time, right, this year, but who knows? And we'll definitely be listening in to these Fed speakers tomorrow morning at 8 o'clock and 9:30. They are kind of like the known unknowns, right? We don't really know what they're going to say and how the markets will react, but we do know we'll be paying attention tomorrow morning early and mid-morning around those Fed speakers. I have a live feed going through our trade room, and so I can always hear kind of what's going on in the background. We watch the markets respond. We don't trade the news, but it's good to know when things are scheduled to be coming out, so you can be paying attention and trade the reaction to that news. And I have to admit, though, what is most likely probably going to be the most important thing for tomorrow. It's nowhere on the schedule, but you may have heard there were some headlines that came out before the market opened. We talked about President Xi in China last night with his remarks. We've now starting to hear more about what the Chinese negotiators are looking for from the American negotiators to get this phase one deal. And that kind of threw some cold water on the overall sentiment today. If you read some of the headlines today, the Chinese negotiators are basically saying we want all the tariffs right off the table before we're ever going to sign any phase one deal. And there appears to be a bit of a gap there between what the U.S. expects and China expects. And tomorrow we might get more clarification on what's going to happen, right? The U.S. side may come back and say, no way, we're not doing that. The Chinese, right, they may push back on that. It's very difficult. That is a big known unknown, and it's most likely what kept the S&P a little bit sluggish today, because there is that kind of sense right now that, okay, we got the phase one deal. They're trying to get it inked in sometime in December. Location to be determined, right? We talked about that last week, but now it's starting to appear that maybe China is coming out of the woodwork saying, well, we kind of want more now. It's tough to tell how the markets will respond to that, and tomorrow will probably be a lot of clarity in the market from what we heard from President Xi and their negotiators in China right early in today's trading session. I have no idea personally, right? And I'll leave my opinions have no value here, but tomorrow we'll likely learn more about how these markets are going to respond to that, because you definitely felt the S&P a little bit depressed, right, by that news this morning. They got that fresh all-time high and they kind of slugged, right, kind of got sluggish as the day wore on. Overall sentiment is still very bullish on the equities, very bearish on the gold right now. But I think tomorrow is going to be a really big day of clarity as far as what exactly is the gap right now with that phase one deal. That is a big known unknown right now, and we'll be definitely taking very careful steps to keep track of that tomorrow. And again, we're not trying to trade the news. We're just simply trying to anticipate when these things are happening, and that way we're paying attention to the markets we want to be watching. All right, so that's all the news and the known unknowns for tomorrow. Let's jump into our charts here, right? What really matters is the charts here. We know we've got some potential for some news headlines tomorrow morning, but what's really important are these charts. Let's grab some charts here right now. Crude, S&P, Nasdaq, and gold. What do we know about oil right now? We know that we are bullish, and we know we're in a range. Those are the most important factors on this chart right now. What is a bull market into a range tell me? It tells me that the bulls, for whatever reason, are having a hard time getting this higher. They're also, every time it pulls back, they're buying it as it pulls back. So buyers are definitely voting their confidence. They're very confident in this, but they're not able to get this market going to new highs. So the best plan of attack in a bull market with a range on it is to try to buy low. And the most effective way for me to do that is to leverage what I call a failure pattern. In other words, I wait for the market to try to make a run lower. I look for sellers in this case to come in and try to sell off a pullback, and I simply look to buy right into those stop losses. That is the easiest way and most reliable way, I might add, to trade a bullish bias to a range-bound market. We know the market's bullish. We know we're just unable to push through these highs, as you can see right now. We know that half-back area at 57.17 is a magnet. If I zoom out here a little bit further, right, you can see kind of where I'm getting a little bit more of these levels on the chart right now. And as you can see, right, we get a nice big bull channel here. We're trying to get that rotation to finish up all the way up to that next measured move. But will we get that through the highs? That's the big question right now. We know we're bullish. We know we're going sideways. My plan here for tomorrow is to buy at levels of support. I've got that trend line coming up underneath me. I've got that range. That range helps me find additional levels of support as well. So this area really becomes a hot spot for us here tomorrow morning in the trade room. I want to buy low, I want to sell high, and as always, I want to avoid the middle of that trading range. So my plan here is to try to get down into that support area. Now, one option would be a relatively shallow pullback. If I can get a relatively shallow pullback here, I can get that moving average coming over, look for sellers to try to sell into that breakout pullback, and I can then look to be a buyer into their stops and hopefully get that pullback pattern before we get back up into that range. If we get a relatively shallow pullback here on the crude, I'm looking for a combination setup, a failure pattern into a pullback combination. Now remember, you don't want to take that pullback pattern inside the range. That's the one caveat to these setups. You don't want to be trading inside the range because inside the range is not a very reliable spot. But what if we get a real strong move down? I've got this deep level down here, right? This 59 to 76 area. What if it really takes a tumble as we go? Well, now the market hasn't turned bearish, so to speak, but it is definitely more momentum for the bears. And in those situations, I'm going to look for a slightly different pattern. It's called a nested failure pattern. These nested failures are my go-to buy setups when I've got a really strong move lower, right? How do you buy a market that looks like it's now bearish, right? Remember, that strong move down, there's a chance these bears will run me out of that, right? So I can't be too aggressive if we get a real deep pullback. What I'll do is I'll wait for the bears to try once, I'll wait for them now to try twice, then I know where their stops are. And once I know where those stops are, now I know where the pain is, and I can be a buyer right into those failures. But what if that move lower keeps going, right? What if they hold that? What if they hold that breakdown? That would be the reversal. So if we do get a strong pullback, right, strong move down, the moving average comes over. If those bears, if they can hold that pullback and jump off the moving average, we call that a 1, 2, 3 reversal in our trade room. I'm going to mark up that low. I'm going to mark up that low and use that now to find the high of a hidden channel. That hidden channel high now becomes my bread and butter to sell in that new bear market. Does that make sense? Right? So 3 scenarios here. One is a shallow pullback. That shallow pullback, again, kind of imagine now we go into that first pullback area. We pull back, moving average comes over, sellers try to sell off of it. It's not a bear market. We're buying into their stop losses. Right back up into that range again. Ranges are balanced. Or deep pullback now. Momentum is now too strong for the bears. 1 try, 2 try, back up in. That's called a nested failure. Or maybe that strong breakdown, maybe they hold the pullback and the bears take control. If they hold the pullback and the bears take it, now what do? Do we chase after it? No. Don't chase it. Wait for the pullback. Mark the lows. Find that hidden channel now. It'll be off some of these highs up here, right? And then mark that level, and we're selling off the top. Got 3 scenarios on the pullback. Does it pull back and fail? Does it pull back into a nested? Or does it pull back into a 1, 2, 3 reversal, right? And we're off to the races going lower here. Now, again, stay away from that middle. Stay out of that middle. What if the market breaks higher here? How do we do this going higher? Well, again, you don't want to buy high right now because we obviously have been rejected, right, going higher here. What if we break higher here? Two patterns I want you to consider. Actually, really 3 things to consider here. One is going to be the typical 1, 2, 3 breakout. 1, 2, 3. 1, 2, 3. 1, strong move up. 2, pull back to the moving average. 3, jump off the moving average. Could have easily had it here. 1, 2, 3. That could have easily been a 1, 2, 3 breakout, but they didn't get it. If they do get it, now what I'll do is I'll mark up that high, mark up that high, mark up that low, and I'm buying, again, off the low of that hidden channel. That pattern should look familiar because that's the same pattern we'd use as we go lower before, right? That 1, 2, 3 reversal, it's the same basic pattern as a 1, 2, 3 breakout going higher. That is the most reliable of the breakout patterns. What is a little more aggressive and what might be the pattern we have to use tomorrow, if we see a strong break higher, Remember, the problem is you've got resistance here overhead from that measured move. So if we do end up getting a strong break higher here, I've got to be concerned with buying into resistance. What's my favorite pattern to avoid buying high? Traps. Wait for a 1 try for the bear, 2 try for the bear, look for a trap low, and you're good. Okay, what this is called it's called a 2-try breakout pattern, or as I kind of joke around by calling it, a FOMO breakout pattern, right? And the reason why I call it a FOMO breakout is because that strong move higher, that gives everybody that fear of missing out. The problem is you've got that measured move waiting just above us, right? As I showed you guys earlier, I don't want to buy too high. And so when I see that strong breakout, I know there'll be some profit taking. I know there'll be some sellers trying to short this thing back down into the range, but it's not a bear market. So we know sellers are on the wrong side of the odds. I'm going to wait for that trap low and look for that 2-try breakout pattern. So now we know those 2 breakout patterns. But here's one more thing to consider too. What if we slam higher here overnight? You know what I'm saying? What if something comes out in Asia, the market slams higher here, and we do another one of these, right? We might easily slam up and go sideways now, right up into that measured move. These are actually pretty common, right? It is actually pretty common to get a run up into a measured move and have the market go sideways. What do we do on that? Once we know the size of the range, that's the key. Once we know how big the range is, then we can use that range to find our range expansions. Just like I'm using this range to find these range expansions, if we make a run higher and we start going sideways now, double tops, double bottoms, or triangles, moving average flattens out, right? It'll look like this one back here. Once we have that range, I'm going to use that range to find my levels of support and then incorporate that level of support with that 2-try failure pattern. Again, wait for that breakdown, wait for those sellers to try to sell that breakout pullback, and we'll buy right into those stop losses. So now we've got the plan pretty much figured out. We know the shallow pullback, the deep pullback, we know the reversal. We know to stay out of the range. We've got 2 breakout patterns, right? The 1, 2, 3 breakout, 1, 2, 3 breakout, the 2-try breakout, the FOMO breakout, or the spike into a range. I think we're ready to go. But wait 1 second though. I've just been drawing on the charts right now. I want to show you what all these patterns look like. And to do that, make sure you grab my free trading class. My free course in the upper right-hand corner, there'll be a link that pops up there for you. Grab that free course. Get registered for the course, because as part of that course, you'll learn my 4 favorite entry patterns. You'll learn my 3-step trading strategy, a super simple way to find reliability in today's volatile markets. And most importantly, you'll get access to hundreds of examples of how we apply our favorite setups on our favorite futures markets. If you haven't grabbed that free course yet and you're trying to become a better trader, you definitely want to grab that free course. If you're on the blog right now, I'll also put a big red button for you guys on the trading blog at Sideways Markets. So don't be afraid to grab that big red button down there as well. But no matter what though, make sure you pause the video if you need to, grab that free class, get registered, and I'll see you guys inside the member section of the website. In the meantime, let's keep going here. Over on the S&P, most likely the most difficult chart of tonight's video newsletter. Now, I think the most important thing we have to understand right now is the bears have momentum. The bears have momentum. They had a strong move down. They held a pullback with a strong move through. Okay, the bears have momentum. Yes, I do understand we are overall bullish, right? There is no doubt about that, right? There is no doubt about that. We are very much overall a bull market, right? So we definitely can see the bulls have the overall momentum. But what it looks like is happening right now, it looks like that gap at the beginning of the week, it just feels like buyers are a little irritated by having no other option than buying high right now. That's what it feels like, right? It feels like these buyers are resisting the opportunity to buy high. It feels to me like everybody's waiting for that chance to buy low, buy low. That's what it feels like. Now, like I mentioned earlier in the news intro, again, I think the commentary out of China early in the session, whether or not that's going to materialize or anything, I think it really threw a lot of cold water on this, because it made people realize, at least from my point of view, that maybe the two sides, the U.S. and the Chinese, it looks like they may not be on the same page as far as what it's going to take to get that phase one deal, right? This phase one deal is going to be hopefully signed in December, but it looks like there might be a gap between what the U.S. wants to do and what China wants to do. No right or wrong, right? Nobody's right or wrong, but I think tomorrow we may see, either we may hear out of the White House, we may hear, right, from President Xi, we may hear from something tomorrow that may clarify that, or the markets may clarify that for us, right? For example, if the markets believe this deal will get done, we'll go right back to that high again. But if the markets do not believe it'll get done, this will probably continue, right, its move going lower. So I think right now, and the biggest thing right now is the bears have control right now. But as you can see, though, I mean, just look at the market. It's obviously a very bull market right now. And as we pull back, I just can't imagine, unless we hear some clarity on this trade deal, I just can't imagine you're not going to have more buyers waiting, right? Just waiting down here when they come back to fill that gap. Now, as I mentioned earlier, right, that's the biggest reason why I just don't see the sellers with a very easy spot to get short right now. You've got this rising support trend line we talked about yesterday. You get the measured move going lower here. The bears do have control. That's very easy to see right now. What is not very easy to see, though, is how do you sell this thing? Right now, the bears have been pretty much just trying to pick little tops up here, but that's been about all they've been able to do. You're not going to sell into that trend line. And I think you're a bit crazy here to sell as you go lower right now, because again, as you go lower, you're going to have more buyers come in and going, okay, measured move. They're going to try to buy this thing back up again. So I know we're bearish, but I have a very hard time finding open space here right now, because even if we do get that run through it, right? Even if we do get a 1, 2, 3 breakout down, now we're right back to that gap now. And we're still not going to have much of an opportunity here to be a seller there. Where do you sell at that point? You know you're selling right into buyers. So let's talk about this, right? What do you think would be the easiest way to be a seller? I don't think you can sell as the market goes higher. I don't think you can sell that. That's going to be a really tough sell, so to speak, right? Pardon the pun, right? That's not going to be an easy spot to sell. Because at that point now, the bears will have tried once, twice, and usually, as we talked about on gold last week, remember that big rally on gold last week after the 2 tries, right? We talk about the 2 try rule quite a bit. We go lower. The bears tried once to go lower. They tried twice to go lower. Oftentimes, after 2 attempts, this market will rally right back up to retest those highs. So again, I don't think trying to sell this thing as it goes higher is going to be a very wise idea here. I also don't think, as this market goes lower, I mean, where's your open space? There's just no space down here. I think the only real way we can be a seller on this is if we get a run that holds. So here's what I would say if you want to be a bear, if you want to sell this market right now. Again, I've made my case. I've got levels of support down here. I think one scenario is going to be, which is really the one that I'm almost convinced will have to happen tomorrow, is we've got to get this market down to that gap, and they've got to sit there for a bit. You know, we're going to have to see those sellers really cast their vote to be pinned right to that gap low. We saw this happen a few months ago, and where we had a gap, it came back and just stuck there for a while. That's probably going to be what's going to have to happen here. So a strong move down, and again, I can't really justify a 1, 2, 3 breakout, because then look, I mean, we're going to be literally we'll be selling right into where a lot of buyers are assumed to be waiting for that chance to get in, because again, this whole thing started from the weekend gap, right? That gap up at 63, nobody had a chance to buy very low in the U.S. morning session or the U.S. session at all. So as we go lower, I really can't get comfortable with a 1, 2, 3 breakout like I would have on oil or on the Nasdaq. We'll talk about in a moment here. I can't get comfortable with that. What I can do, though, is if the market sits, if we sit, right, if we can get a good hour of sitting down around that 63, just somewhere down there, then that'll be enough for me now to take that range, structure my range expansions, and then look to sell with a 1-2 failure pattern, right? Literally, what we'll do is we'll wait for that market. Again, anytime you've got a range, the size of the range determines where that overhead resistance is. Then I'll wait for that pop higher. I'll get that moving average coming up and look for those buyers to try buying that breakout pullback so I can sell right into those stop losses. Okay, we call it a failure pattern. It's called a 2-try failure pattern. It's a very, very simple pattern. But again, I think the most important thing on this is going to be that trading range. Now, if it becomes more extreme, right, and it runs and keeps going, okay, all right, I'm convinced. Right? So if we do see it, but as far as looking for a 1-2-3 breakdown and trying to be a seller off, I just think you're walking right into a hornet's nest. I think that's a very, very bad spot. Maybe I'm wrong. It could be, right? But right now, it doesn't look like a very good spot to be doing it. I'm going to want to see us go 1, 2, 3 and literally keep going, right? Then I can mark my low. Then I'll be more inclined to look for that sell off the top. But as you can see, I am very, very concerned about being a seller down here, right? Because of where we are. And really a lot of this has to do with that gap. Right? Because I think a lot of traders, like I mentioned yesterday, a lot of traders, they hadn't even woken up, right, before the market went all to new highs, right, on Sunday night, Monday morning. So I think a lot of buyers are frustrated with the fact that they weren't able to get in, and I think they'll be waiting down there, right, to buy at it. So very, very difficult to be a seller right now on this S&P. How do we buy this market, though? How do we buy it? Not easy, because as you can tell, the bears have control. When the bears have control, the biggest problem is you've got to give those sellers the benefit of the doubt. You can't get too aggressive. And so whenever I try to buy in a bear market, what's my favorite pattern? A crown reversal. One example, we go down, bears try once, bears try twice, trap, right, trap low and go, right? Crown reversal. 1 try, 2 try. Remember, the bears have control. Okay, I don't think the bears have a lot of open space down here, and I do think there are buyers waiting down here. Okay, now again, I'm going to wait for that conservative entry pattern long. Now maybe I'm wrong, right? Maybe it runs and then goes 1, 2, 3 back up. Perfect. Grab it, buy that low, and we're good to go. Okay, but again, I can't just buy down here. Right? You can't just buy down there because it's support level. You can't. So it was too bearish right now. So as we go lower, it'll be a 1 try, it'll be a 2 try, and ideally here, because of the overall bear momentum, I want to look for that trap. Right? 1 try for the bears, 2 try for the bears. Okay? It's called a crown reversal. Or as we go higher here, basically same idea, right? Same idea. If we go higher, this is a range. And so we've got to think they're going to be sellers trying to sell the top of that range. Look what they did before. So again, what I want now is I want a crown reversal, right? I want to see this move go up. 1, I want to see 2, and I want to see a trap low, right? That trap low is about all I can use here. Ideally, it's a move up with a 1, a 2, and I can stay out of that range. That would be ideal, right? That would be ideal. Now we've got... That's something you can get confident about. That's something you can really get excited about. Okay, because now you've got the bears trying 1 try, 2 try, they rally higher. You're anticipating this range. And that range is the tricky part because it's going to be sellers waiting up top there. That's why I'm not saying just buy it as it goes higher because, well, again, look left and you can see that's not a very good idea, right? So we're looking for those sellers trying once, trying twice, and then back up from there. Or again, if we get a 1, 2, 3 reversal, great. Mark the high, find that hidden channel. Just make sure you're getting that long before you get back up to retest the 82.5 area. If we do make a run back straight up and go into a range up here, just like on oil, right? If it does run up into that overhead resistance for a range there, mark up that range, find that level of support, and 1, 2, and up from there, right? Let those bears try going lower, get that moving average coming over, get those sellers to sell the breakout pullback. Breakout pullbacks are not very reliable, especially not in a bull market at that point. and we're buying underneath that trading range. So really, that's this is about as difficult it's going to get, guys, right here. This chart right here is about as difficult as it gets. We are bearish, but we're too low to sell. You know what I mean? We're bearish, but we can't sell it. We also can't buy it very easily. So for me to be a seller, I would normally want to see a 1, 2, 3 breakout. But in this case, we've got a traffic jam right here. We get the gap right down there. And again, I want to make it very clear. The gap is not automatically an issue. Okay, the gap is just an arbitrary line on the chart right now. But when you look at the situation we're in, when you see that, it's a measured move. When you see that, it's a range. It just makes it very difficult to want to get aggressive selling underneath a range. It does, right? So what I want to do is try to find a way to buy underneath that low, crown reversal, trap low there, or, right, do we shoot up? That would be the ideal. That would really be a gift from the S&P here for us. 1 try, 2 try, trap low. That would be kind of a crown reversal, but it would also almost be, right, like a 2 try breakout pattern as we go higher. This is going to be something we're watching closely here in the overnight Asian session. Just remember, major resistance here overhead. So if it does make a run back up, wait for that pullback. Wait for those sellers to fail off that reversal trade, right, and buy right into those stop losses with that failure pattern. And again, I know I'm going fast here right now, but that's why I've got that free course for you. If you want a deeper dive into the entire trading strategy, learn my favorite patterns, right, make sure you grab that free trading course linked up in the upper right hand corner. And you know what? What do we sit? If we sit here going sideways, then it continues to be a bear market. Right? I would say right now, if we sit going sideways here for a while, then all of a sudden you look at this market now as a bear market, right, into a range. If we sit here overnight going sideways, we're now going to start looking to buy the low and sell the high with those failure patterns. That'll be later in the session though. Right? So if we sit here for a while, right? If we get through Asia into London and we're sitting there sideways, we'll now look at this as a brand new range, which means sell high and buy low, focusing on what? Focusing on those failure patterns that I teach, right, in our free trading class. Let's keep going. Now that's the hard one, right? That's the hard one. Now on to the much easier stuff. How about the Nasdaq? Nasdaq's a walk in the park compared to the S&P. And again, the S&P is not that difficult. It's just there's nothing really setting up right now, which means you've got to be patient to wait for more information. The Nasdaq is pretty darn simple. We know the market's bullish. We know we have this range. Range-bound markets are balanced markets. They also tell us to buy low and sell high, right? We take the size of that trading range. The size of the range shows me the sell zone overhead. It helps me find my buy zone underneath. And what do, right? We sell high, we buy low. Obviously, I want to use a slightly more conservative trade setup to sell off of the high, right? Similar thing to buy off of the low. Most important thing, one of my favorite tricks in a range-bound market is the expanding triangle. You'll notice how I draw the trend lines off the higher highs, off the lower lows, and that would really be a fantastic spot to get long here on the Nasdaq. We know we're bullish. We know we're range-bound. Range-bound markets tell me buy low, sell high, avoid the middle. So I know where I want to be buying. I want to buy at support. Additional support levels, I've marked up those highs down to that low. That is a great level of support. I've talked about that trend line. That's a great level of support. The buy zones are a level of support. Got plenty of support down there. All we need is this market to pull back. So if we get a pullback, a lot of this has to do with the type of momentum that we see on that pullback, right? Again, if we sit inside the range, stay out of the market, stay away from it. If we do make a run lower here, right? If we do make a run lower, a shallow pullback down to the low of this kind of expanding triangle is a little bit different than a deep pullback down to the low of that hidden channel. If it's a shallow pullback, momentum is not going to be that bad for the bears, right? And because of that, I can be a buyer right into those stop losses. Now, look what happened back here. This is a really good example of why I always try to remind you, stay out of the range. See what happened here? It was a nice breakdown. It pulled back to the moving average. The bears try to sell off of it. And this is a great looking failure pattern. It's a great looking pattern, except it's in the range. And what happens when you trade inside the range is the market kicks back because nobody wants to trade in here. There's no money to make in there. And so the reality is, if you take a failure pattern that is underneath the range, everybody trading that can risk small to earn large. And you'll be successful doing that. But if that pattern was to do this, where it really does like that, right? And you're left with trying to buy inside the range, you can't risk small, right? You can't risk small to earn large. And because of that lack of potential reward, nobody's going to want to trade that. And oftentimes what happens is it'll go up, it'll trigger, it'll run lower, and then it will go up, right? Because what are they trying to do? They're trying to buy low. They're trying to find a way to buy without buying inside the range. So good example back here, right? If you find a failure inside the range, stay away. Unfortunately, it's not a very reliable trade. Sometimes they'll work, right? Sometimes they will work. You'll notice there will be times where a failure inside of a range will work. But, there's always an exception to every rule, right? What do they always say, right? There's even a broken clock is right twice a day. You will see bad patterns give you a good result. And that's one of the hard parts of trading. Right? You can make money today by doing a horrible job at finding reliable setups, but now you're thinking those are trades you should be taking every time. The markets have a way of rewarding you for bad behavior in the short term, but in the long term, they'll make you pay for it, right? Because the probabilities won't be there. So the bottom line again here is, I know it's a range. I want to buy low. Typically, we see that break down. The bears will try to sell off that breakout pullback, and we'll look for that failure into pullback combination, right? Love that failure into pullback combination. Another thing you want to consider here is a strong move down, right? That hidden channel down here. If we get that strong move down, I still want to be a buyer, but now I've got to be careful. Now I've got to be careful because those bears are probably not going to give up without some sort of fight, right? Momentum is too strong. And because of that, I let them try once, let them try twice, and I'm buying now right into those stop losses. It's the same idea. Right? You're letting those counter trend breakout sellers, you're letting them wrap that rope right around their neck. Let them try once, let them try twice. Once all the sellers are committed down there, then we can buy it right back up. Because what happens when you're a seller and you get stopped out? You become a buyer, right? The only way to get out of a short position is to buy your way out, isn't it? And that's exactly what happens. The market rallies back up into that range. And don't forget, too, we oftentimes see that nested failure into a hidden channel pullback. Think of it this way, strong move down. I'm going a little more advanced here for you, right? But, we oftentimes see that one try. Get that off there. There we go. Come on. I know. Hit the wrong button there. There we go. 1 and 2, right? Then we see, again, that's the failure. We jump up, and now what do? Now you mark up that high, you mark up that low. Here comes your pullback, right? And there's your pullback set up to follow it up, right? It's a failure into kind of a hidden channel pullback as we go. Now, we don't always get the pullback, right? Sometimes the market won't pull back. Sometimes it just runs, okay? We don't complain about those, obviously. Okay, we're not complaining about those failures that run like that. But the reality is, though, is that when it does pull all the way back like that, you're going to want to make sure you look for that nested failure pattern instead of just your typical failure. Again, stay out of that range, right? Stay out of that range. Stay away from the middle. What if we go higher here? Can I sell it as we go higher? I can. What pattern? If we go higher, how do I sell it back in? Crown reversal. Strong move up. Buyers try once. Lower low, buyers try twice, you got it. It is a full-fledged failure and reversal if you're trying to sell in this market right now. Okay, it's not like trying to buy underneath the range. You're trying to sell above this range. You are trying to go against that trend. And so we want to make sure we, again, absorb those buyers, give the buyers the benefit of the doubt, There will always be, there'll always be the exception. There'll always be that time that goes straight up and straight back down, but it's not going to happen reliable enough. So as we go higher, right, wait for the buyers once, wait for them to try twice, and then sell it back down from there, right? That nested failure, incorporate the trap high, and that really gives you a great setup to sell off of that high. How about a breakout? What would a breakout look like on this? 1, 2, 3. 1, strong move up. 2, pull back to the moving average. 3, strong jump off the moving average. Mark the high, mark the low, mark that swing. There's your sweet spot. Buy the pullback. Right? Buy the pullback. That's one of them. Another one would be the FOMO breakout. Strong move up. 1 try for the bulls, for the bears. 2 try for the bears. Remember, the first one is usually a profit-taking pullback for the bulls. The second one, that's where sellers now commit. And now we know exactly where their stops are. And we need those stops to finish off, right? To finish off this expanding triangle. Right? So where's our target if we go higher? If we go higher, 1, 2, 3, up to that expanding triangle, right? Or we go up 1, 2, up to that expanding triangle. What else could we use here overhead? 1 leg, 2 leg, 3 leg. Now, this is biting off a pretty good chunk here, right? But you can see that 8,300, 8,310 area. That obviously, that's going to be a pretty excessive target. But again, I think tomorrow, I think anything is possible here because of the clarity we're still waiting to get out of that commentary from China, right, in the overnight. Now, as we go lower, right, again, if we drop here, we're waiting for that nested and back up. But if they run, they hold, and they go, now we're bearish. Mark that low, mark that high, and we're selling off that high. Once I see a 1, 2, 3 reversal pattern, find that hidden channel and sell off the top of that hidden channel, right? It's a very reliable setup, but you have to wait for the market to truly reverse. Nasdaq, we're trying to buy low, we're trying to sell high. We are overall bullish. You can definitely be a lot more aggressive being a buyer than you can being a seller. And don't forget, tomorrow morning, we're going to do this all together in our trade room. Let's wrap it up here right now with the yellow metal, the gold futures. The most important thing on the gold right now is to remember that tomorrow's most likely going to go sideways inside of a range. It is. We have a big strong move down today on the gold, right? Anytime we see this much movement in one direction in one trading day, the reality is the market needs to catch up, right? The longer term moving average is going to catch up, and a lot of times the market will start going sideways that following day. We may not know exactly where that range is right now, but that is definitely something I'll be watching closely here in the overnight and the pre-market here for tomorrow. So, really there's a couple different things that you want to think about. Ideally, we know we're bearish, right? We want to sell at resistance. So I marked up these lows. I've marked them up the highs, right? And that is obviously an area of resistance here overhead. So what I can do is I can wait for us to go up. I'd like to make sure I include this 89.8 area because I know there are going to be a lot of sellers waiting above that area. I'd like to then look for the buyers now to come in and try to buy that pullback so I can now sell right into those stop losses. Okay, that'll be the most aggressive of all of the setups here today. And again, that will be aggressive because it won't be much of a deep pullback whatsoever. A deeper pullback will be a strong move up. I really like this reversal line. That reversal line at 92.6. That strong move down, that pullback, that run, they never came back to that area. They came very close to that area. You'll notice that level could even be a little bit higher there, really. Like that. They never got that area. That 92.6, 92.7 area, that'd be a great spot to be a seller. The problem, as you can see, though, is it's going to be a pretty big pullback. And when we get that deep of a pullback now, what do we know? The buyers are probably not going to give up to the fight. So we want to wait for the 1 try for the bulls, 2 try for the bulls, and sell it back down. You'll notice it's the same fundamentals, right, as we talked about before, right? If we get a shallow pullback, it's a straight failure and back down, right? We know the buyers will come in. The buyers will try to run these sellers out. We know the stops are, and we can sell into those stop losses. That will happen very early in the overnight Asian session. If they really run it higher, though, now we have to think they could be running back to that big round number. So as it pulls back, I want to give them 2 tries now, 1 and 2, and then sell it back down. That nested variation of the failure pattern. And then also, too, keep an eye out for a 1 2-legged pullback. Draw the trend line up, and then we can use that trend line as a level of resistance. We call these a 2-legged pullback pattern, or a 2LP. You'll learn a lot about those very specific setups in that free course that I mentioned earlier, the 2LP, the 2-legged pullback pattern. Those aren't as common as your standard failure patterns, but boy, are they reliable when you get them. What would a reversal look like? Pretty easy, right? We go up, we pull back to the moving average, and we jump off the moving average. At that point, we know where they're trying to go. Now we just need to get some sort of pullback, right, to the low of that hidden channel. Find that 1, 2, 3 reversal. 1, 2, 3 reversal. Mark up those highs. Bring it down to that low. Buy off that low. And we have to assume that round number is going to be where they're trying to go here, right? We'll know more tomorrow, right, if they do get all the way back to that round number and what they do when they get there. There's a chance here we may see a 1, 2, 3. It may run up and go sideways, right? If that's the case, obviously now mark up your range, 1, 2, and we're buying underneath it. Same basic plan that we've talked about many times already tonight. And again, I know I'm going relatively quickly on this, but because I want to make sure I cover as much as I can. But remember, we're going to do this together every morning together in our trade room. So don't feel like you got to know it all right now. I don't expect you to learn everything on this newsletter, but I do hope you'll pick up some tips and tricks on things to look for tomorrow. Most importantly, right, things to avoid tomorrow, some traps to avoid tomorrow. And again, we'll do it together right in our trade room. Now, if we go range here, right? If we go range here, the biggest thing when it comes to a range is going to be finding that expanding triangle, right? And then buying low, selling high, buying low, selling high. What I really hope we get is, if we do get that range, is to get that expanding triangle pattern, because that's always going to be a really easy way to make sure you're selling high. And then again, if you're going to buy low, you want to use that nested or those crown reversal patterns, right? So, it's a little bit difficult right now because we don't have enough information yet for this. But one scenario would be, let's say we just go sideways here, right? A couple hours go by, we're still going sideways. At that point now, we'll know the range. We'll mark up those range expansions. Okay, I'm going to sell above with a buyer failure. Okay, sell above with a buyer failure. How do we buy underneath? We buy underneath with a crown reversal, right? A nested failure with a trap, right? Nested failure with a trap. Those are the 2 basic patterns if we're looking for a range, okay? If it also goes into a range here tomorrow, right? If we sit inside of a range, what's the breakout look like? A breakout would be a 1, 2, 3 breakout higher, mark the high, find the hidden channel, and buy the low of that hidden channel, right? How about a breakdown, though? What a breakdown do? Yeah, 1, 2, 3 breakdown, mark that low, mark that high. Make sure you don't try to trade the breakdown, right? You wouldn't want to trade the breakdown. Again, it's gone way too far today. Anything going lower, we'll put it this way, anything going lower, I'm looking for a crown reversal to pop it right back up again. Right? So it's got to go 1, 2, 3, hold, bring that down, find that new channel, and go from there. But I'm going to warn you, though, there's not a lot of space down here, right? There's not a lot of space. We've got this, 78 area. Okay, so we've got to really see. This thing really has to go 1, 2, 3. It's got to really punch through, just like the S&P. It's not a lot of comfortable space down here, right, until you get through that 78. We really got to see that 1, 2, 3 and really run. Okay, mark that low, mark that high, and then find that, right? Find that hidden channel. If we get it, that'll be a great sell off the top of that hidden channel. If we don't get it, right, then it'll probably poke right back up, right? We run lower, 1 try, 2 try, crown reversal, nested failure, back up into that trading range. Again, what I hope we get is, I hope we get that I hope we get that inverted triangle, go up, get the moving average coming over. Buyers, of course, it's a bear market overall, right? Buyers try, they fail, we go back down. At the low here now, it's so bearish, it's a 1, a 2, back up. Is that making sense, right? When I'm going with the trend, I can simply sell into buyer failures at resistance, right? Find that level of resistance and sell using a buyer failure pattern at resistance. If I am going to buy in a bear market, though, again, I've got to give those bears the benefit of the doubt, and I've got to be a buyer only after I wait for those sellers to fully commit twice and then buy right back up from there. And again, I like to look for that trap low because it really protects me against that stop run. All right, guys? And again, don't be afraid of the reversal. Just make sure you get it. Strong move up, pull back, and go, right? Don't predict the reversal, but wait for the reversal. The reversal might be the easiest money we make, right, tomorrow, because you almost know where they're trying to go, right? They're trying to go back to that big round number. And if they get the reversal, it should be pretty easy, right? If it just runs, right? Let's say it runs up here, big run higher here, big run higher here, right? It's probably going to be a 1-2, right? 1-2 trap and go. But again, up, failure, back down. We go up into the battle zone, 1 and 2, back down. Or we make that run, 2-try breakout pattern, 1, 2, 3 reversal pattern, right? All the patterns we talked about here so far. So again, very simple idea here on gold. Just be very careful selling too low right now, right? Be very careful being a seller down here because again, we did go so far, so fast today. Be anticipating a range. It might be a couple hours here overnight before we know more about where that range is. And once we do, we'll be able to structure the patterns and then wait for our setups accordingly. And don't forget, like I mentioned earlier, guys, I've got that free course linked up in the upper right-hand corner. Make sure you grab the free course, and also, too, make sure you come out and join us every morning in our trade room. Don't forget, you can get registered as an advanced member right on our website. Our advanced course includes all of our beginner, intermediate, and advanced classroom sessions. It includes all the indicators, the cheat sheets, and checklists, and of course, it includes unlimited time with me every morning in our trade room. I've got all the tools that we need, all the cheat sheets and checklists all ready for you as an advanced member, and you can register on our website. If you're on YouTube right now, I'll also put the registration link in the description of the YouTube video, or if you're on the blog here at Sideways Markets, there's a big blue button right below the video tonight, and that will be your best option to register for tomorrow morning's trade room. So don't delay, get registered. I want to see you there tomorrow morning with me at the opening bell. As always, if membership isn't a good fit for you right now, definitely grab that free class as part of our free trial. It'll also include a free pass. Come out and join me as a guest in our trade room. And if you have any questions, don't be afraid to call me, right? Call that toll-free phone number right to the right of my ugly mug. Grab that live support tool right below us there and keep in touch, because I realize you might be watching this video alone at your desk right now, but you are never alone on your journey when you're working with me as a client. So keep in touch, call, email, live support, jump on Skype, whatever you do though, enjoy the rest of your evening. Thank you so much for tuning in. Hope you learned a lot. Tomorrow morning, we'll put it to work to earn a lot together in our trade room. And as always, guys, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.